Today we're diving into a topic that many of you have been asking about: how to invest in real estate with no money down. Yes, you heard that right, no money down. Now before you start thinking this is some get-rich-quick scheme, let me be clear. Investing in real estate still takes work, even with no money down. It's not about avoiding risk, it's about using creative strategies to your advantage. In this video, I'm going to break down 5 powerful methods you can use to start building your real estate portfolio, even if you're starting with limited capital. We'll cover everything from leveraging other people's money to finding hidden government programs that can give you a head start. So buckle up, hit that subscribe button, and let's get started. Alright, let's talk about OPM, other people's money. This concept is a game changer in the world of real estate investment. This is the cornerstone of many successful real estate empires. By leveraging OPM, investors can scale their portfolios much faster than if they relied solely on their own funds. Essentially, you're using someone else's cash to purchase an investment property. This allows you to take advantage of opportunities that might otherwise be out of reach. Think about it like this. Instead of saving for years to buy a rental property outright, you find someone who's willing to lend you the money to buy it now. This accelerates your investment journey significantly. This could be a family member, a friend, or even a private lender. Each source of OPM comes with its own set of advantages and considerations. Now they're not just going to hand over hundreds of thousands of dollars out of the goodness of their hearts. They need to see a return on their investment. You need to offer them a compelling deal. This means presenting a well-thought-out business plan that highlights the potential returns and mitigates the risks. This usually involves a solid interest rate, a clear repayment plan, and of course demonstrating that you've done your homework on the investment property. Thorough research and preparation are key. One popular method of using OPM is through private loans. These can be a great alternative to traditional bank loans. These are loans from individuals rather than traditional banks. Private lenders can offer more personalized terms. The beauty of private loans is that they often come with more flexible terms and faster approval times. This can be crucial when you need to act quickly on a great deal. However, remember that private lenders typically charge higher interest rates than banks. This is the trade-off for the flexibility and speed they offer. So, you need to crunch the numbers and make sure the investment property's cash flow can cover the loan payments and still leave you with a profit. Financial diligence is essential. Another way to leverage OPM is through partnerships. This can be a powerful strategy for pooling resources and expertise. Let's say you found an amazing deal on a multifamily property, but you're a bit short on the down payment. This is where a partnership can come into play. You could partner with someone who has the cash, but doesn't have the time or desire to manage the property. This way, both parties benefit from the arrangement. You bring the deal, the management expertise, and they bring the capital. It's a win-win situation. Both parties leverage their strengths for mutual gain, but remember, partnerships can be tricky. Clear communication and defined roles are crucial to avoid conflicts. It's crucial to have a clear agreement in place that outlines each partner's responsibilities, contributions, and profit sharing. Legal documentation is essential. The key to successfully using OPM is to build trust and transparency with your lenders or partners. Trust is the foundation of any financial relationship. Be upfront about the risks and potential rewards, and always over-communicate throughout the process. Transparency fosters trust and long-term relationships. Remember, you're not just borrowing money, you're building relationships. These relationships can open doors to future opportunities and collaborations. Okay, let's dive into one of my favorite strategies: seller financing. This is a powerful tool that can open up new opportunities for both buyers and sellers. This is where the seller of the property actually becomes the lender, essentially stepping into the shoes of a bank. Yes, you heard that right. Instead of getting a traditional mortgage from a bank, you make payments directly to the seller. This can simplify the process significantly. This can be a game changer, especially in a competitive market, or if you have a less than perfect credit score. It opens doors that might otherwise be closed. Now, why would a seller agree to this? Well, there are a few compelling reasons. First, it can help them sell their property faster, which is often a top priority for sellers. Not everyone qualifies for a traditional mortgage, so offering seller financing can attract a wider pool of buyers, increasing the chances of a quick sale. Second, it can provide them with a steady stream of passive income, which can be very appealing. Instead of getting a lump sum from the sale, they receive regular payments with interest, creating a reliable income stream. And let's be honest, who doesn't love passive income? It's a win-win for the seller. To make seller financing work, you need to negotiate favorable terms with the seller. This is where your negotiation skills come into play. This includes the purchase price, the interest rate, the repayment period, and the down payment. Each of these elements can be adjusted to suit both parties. Don't be afraid to get creative here. Creativity can lead to solutions that benefit everyone involved. Maybe you offer a slightly higher purchase price in exchange for a lower interest rate. This can make the deal more attractive to the seller. Or, you propose a balloon payment after a certain number of years. This can provide flexibility in your payment plan. The key is to find a win-win situation that benefits both you and the seller. Remember, communication is key. Clear and open dialogue can make all the difference. Explain your situation to the seller, highlight the benefits of seller financing, and be willing to negotiate. Flexibility and understanding can lead to a successful agreement. You might be surprised how many sellers are open to this arrangement, especially if it means closing the deal faster and avoiding the hassles of traditional financing. It's a strategy worth considering. Chapter 3. Lease Options. Control without ownership. Let's talk about lease options, a powerful strategy that allows you to control a property without actually owning it up front. This method can be a game changer for those looking to enter the real estate market without a large initial investment. It's like having your cake and eating it too. Here's how it works. You find a property owner who's willing to lease you their property with the option to buy it later at a predetermined price. This arrangement can provide you with the time needed to secure financing or improve your credit score. This means you're essentially locking in the purchase price today, even if you're not ready or able to buy it right now. This can be particularly advantageous if you anticipate that property values will rise in the near future. This strategy is especially beneficial in a rising market. As property values increase, your locked-in price becomes more valuable. Let's say you lock in a purchase price of $300,000 today. This gives you a clear financial target to work towards. Over the next 2 years, the market heats up, and the property value jumps to $350,000. This increase in value can significantly boost your investment potential. Guess what? You have the option to buy the property at the original agreed-upon price of $300,000, giving you an instant $50,000 equity gain. This can be a substantial return on your initial investment. Now, to secure a lease option, you typically pay the seller an option fee. This fee is usually a small percentage of the property's value. This fee gives you the exclusive right to purchase the property during the option period. It essentially holds the property for you while you decide your next steps. The beauty of lease options is that they offer flexibility. You can use this time to evaluate the property, the neighborhood, and your financial situation. If, for any reason, you decide not to purchase the property during the option period, you simply walk away, forfeiting the option fee. This can be a small price to pay for the opportunity to explore a potential investment without full commitment. However, if you've structured the deal correctly, you can potentially sublet the property during the option period, generating cash flow to cover your option fee and potentially even turn a profit. This can be an excellent way to mitigate risks and maximize returns. Lease options can be a fantastic way to get started in real estate investing with minimal upfront costs. They provide a unique opportunity to control valuable assets without the need for immediate full ownership. Just be sure to thoroughly research the local market, negotiate favorable lease option terms, and consult with a real estate attorney to ensure the contract protects your interests. This due diligence can make all the difference in your success. Chapter 4. Partnerships. Finding the right money partner. Let's face it, real estate investing can be a capital-intensive endeavor. But what if you could pool resources with someone who shares your vision? That's where partnerships come in. Finding the right money partner can be a game changer, providing you with the financial firepower to tackle bigger deals and scale your portfolio faster. But remember, not all partnerships are created equal. It's crucial to find a partner who aligns with your investment goals, risk tolerance, and work ethic. Start by networking within your circle of influence. Talk to friends, family members, colleagues, or even fellow real estate investors. You never know who might be interested in exploring a potential partnership. Another avenue is to attend local real estate investor meetups or online forums. These events attract like-minded individuals who are actively seeking investment opportunities and potential partners. When evaluating potential partners, look for individuals who have a solid financial background, a genuine interest in real estate, and a shared vision for the partnership. It's also essential to establish clear communication from the outset. Discuss your investment strategies, risk appetite, profit-sharing arrangements, and exit strategies. Remember, a successful partnership is built on trust, transparency, and open communication. Take your time, vet potential partners carefully, and don't be afraid to walk away if the fit doesn't feel right. Chapter 5. Government Programs and Grants Unlocking Hidden Opportunities. Believe it or not, there are government programs and grants specifically designed to help aspiring real estate investors get their foot in the door. These programs often provide down payment assistance, low-interest loans, or even tax breaks for qualified buyers. One such program is the Federal Housing Administration, or FHA loan program. FHA loans are insured by the government, making them less risky for lenders and allowing them to offer more favorable terms to borrowers. With an FHA loan, you can potentially purchase a property with as little as 3.5% down, significantly reducing the upfront capital required. Another program worth exploring is the United States Department of Agriculture, or USDA loan program. USDA loans are designed to promote homeownership in rural areas. If you're looking to invest in a property located in a designated rural area, you may qualify for a USDA loan with no down payment required. In addition to federal programs, many states and local municipalities offer their own housing assistance programs. These programs can vary widely, so it's crucial to research the specific programs available in your area. To find government programs and grants, start by visiting the website of your state's housing finance agency. You can also contact your local Housing and Urban Development, or HUD office, or consult with a HUD-approved housing counseling agency. Don't overlook these valuable resources. Government programs and grants can provide the financial boost you need to make your real estate investing dreams a reality. Start building your real estate empire. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more tips on real estate investing. Remember, building a real estate portfolio takes time, effort, and a willingness to think outside the box. But by utilizing these no-money-down strategies, you can overcome financial barriers and start creating passive income and long-term wealth through real estate. See you in the next video.